When the market realizes that the Fed cannot come out and just print us out of the next recession, you're going to see all out panic hit the market.
Hey guys, welcome back to the channel. Today we have Gareth Soloway forecasting Bitcoin's next move, as well as his take on the economy. Soloway has seen that inflation is so high, no one can stop it. But on the other hand, if inflation decreases, but the unemployment rate goes up, money would start being printed again. Soloway says there is no good endgame in the market. Everything will only destroy the economy in the long term. Soloway says that investors need to be aware that there will be a massive reset where the dollar will collapse. He says that charts always tell the truth because all they show is data, while all media is filled with bias. Let's listen to this interview with Gareth Soloway as he gives his investment advice before the next collapse and predicts Bitcoin's next step. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
The way I view it is there's going to be kind of this kind of weight, right? So you have like one of those weighting machines where, you know, one side's heavier than the other and it goes back and forth. So right now inflation is high, so they can't do anything about that. If inflation comes down to, let's say, 4%, but assume in an economic catastrophic event, unemployment goes to 12%. With 4% inflation, but 12% unemployment, I do think that they would start printing money again because it's the lesser of the two evils. The problem is there's no good end game here. Like, you could do that back and forth for 5 years, 10 years, 15 years. All you're going to do is just crush the overall economy in the long run, and you're going to have a meteoric reset in the system where the dollar eventually collapses. So it's crazy scenario, but investors in today's day and age, we have to be so aware of the long-term implications and really protect ourselves. I mean, whether it's Bitcoin, whether it's gold, whether it's other things, we have to be aware of what ultimately is going to happen. I always say to people, charts are truth, meaning that, you know, you can go on, listen to the news, you can read stories online. There's always bias in that stuff. I mean, even if someone tries not to have bias, we inherently have bias. But what you can't do is say that a chart has bias. A chart is just showing you the general price action of basically millions and millions and millions of investors. And if you can read those patterns, it tells you the likely scenario of what's going to happen.
Soloway is astounded that Bitcoin hasn't conveyed more strength in the market. This is because Bitcoin usually does the risk minimum at least 2 times when the stock market rallies. This hasn't happened because Bitcoin has floated up due to the fear of investors who have already lost money in crypto scenarios. Soloway believes that it's important to recognize that the current long-term pattern is very bearish. He sees that Bitcoin has the ability to go down another leg.
I'm surprised, honestly, that Bitcoin hasn't shown more strength. And the reason why, you might say, well, why does Bitcoin need to show strength? Well, it doesn't need to. But the bottom line is, when you have a stock market rallying, it's telling you that there's risk on. And generally, Bitcoin, you know, 2 times does that risk minimum, maybe 3 times. So if like the NASDAQ goes up 2%, oftentimes you'll see Bitcoin up 4 or 6 or 8%. You haven't seen that here. And that has to be something that you pay attention to, because I think what's going on here is that, so Bitcoin has floated up, but you're not seeing the same bang for your buck as the technology stocks because of Voyager, Celsius. I mean, there's definitely this fear amongst average investors that got burned, that their money got locked up in some of these fiascos. And so I think you're seeing less interest as a risk asset of going back in. Now, again, I think it's important to recognize that the longer term pattern here is bearish. I do still think we could go test one more time the high here, get up to about 25,500. But I have to be honest, I still have a downside ultimate target of 12 to 13,000 on Bitcoin. So I do think there's another leg lower. You can almost see the writing on the wall now, because if let's just say the NASDAQ starts to really tank again, and it's already like, I mean, we're seeing the NASDAQ's like 20% off of its lows, or 15%. So, I mean, imagine the NASDAQ just drops 20% back to its recent lows. You can't tell me that Bitcoin's not going to at least break the low here and head lower. And really, if you're talking, the low I think was 17,600 or whatever it was. I mean, really at that point, you're not that far away from 12 to 13,000. So I do think you have more downside, unfortunately. I love Bitcoin long term. I think it's exactly what the world needs, but it has to get this flush out. you haven't seen enough retail investors get freaked out to the point where they actually start talking about it not being worthless, like we saw in 2018 before the 2019-20 started to move up and 21 run up. So I think that also has to happen. And I still think you have to make a lot of these other coins go to zero. Not necessarily the top 20, 30 coins, but there's so many junk coins out there. If you look at the .com era, there was a major flush out and the best survived. And that's actually the healthiest thing for it to happen. So I think, again, on a technical basis, I've calculated it out. 12, 13,000 will be an interesting target. I'm hopeful that's the low. I'm going to start accumulating as we get below here, back into the teens for a longer term kind of hodl position. The bottom line is, if you start to see the NASDAQ rolling over, at some point, this channel gets taken out, and then you got to think Bitcoin's channel gets taken out. And again, Bitcoin's channel, look at how flat it is comparatively. I mean, it is just so flat in terms of a bearish consolidation pattern. So I do think that's exactly it. The next kind of risk off period takes Bitcoin down to that 12 to 13,000 level. And again, I think that's where you have a chance at making a bottom. There's a small chance that I kind of do the comparison where I look at the Amazon chart from 2000, because I kind of say, hey, look at Amazon today. That's where I envision Bitcoin being like the biggest player on the block. So what did it do? What did Amazon as a .com do when the .coms collapsed? And Amazon actually dropped about 95%. So that's my real worst case scenario. I think my goalpost right now, my kind of common sense target is 12 to 13,000. But I do want people to be aware that there's always a chance that you could see that 95% drop, which takes us back to about 3,500 on Bitcoin. Now, again, Amazon at that point was, if you took away the split, it was about a $6 stock, and then it went to like 3,500. So again, then map it out where Bitcoin could go later on, and that's why I'm so long-term bullish on it. But it certainly is. I mean, this is unprecedented in terms of Bitcoin's history with everything going on. The Fed, Bitcoin's never experienced a tightening phase like this, inflation this high. It's only been around since 2009. So this is where it gets really tricky, right? Is that as much as I think it's going to 12 or 13, at this point, if you've ridden it down from 65 or 69, the question is it worth dumping some of that position and trying to buy lower? It's hard for me to give advice on that because it's such a tricky thing. I wouldn't want it to hit 15,000 and then start its next bull run and then people miss out on it. What I like to do is basically I would just say, if you're still in it and you've ridden it down, I don't know if I'd take the risk of exiting at these levels. I mean, even, if you think about from 69 to 22 where it is, that amount of drop, I mean, if I'm saying it's going to go to 12, it's only another $10,000. It's the equivalent of from 65 going to 55. It's not that big of a move. So just so everyone knows what I'm looking to do, basically below 20, at 19, I put 1/6 of what I want to own as a hodl position in Bitcoin into a portfolio, right? And basically every 2,000 to 3,000 down, I'm going to add another 1/6. So I'll have 2/6, 3/6, 4/6, 5/6 of a position, and then finally a full position at 6/6. If it gets below 10,000, that would be my last add right there. So I would say to people, I mean, you got to choose what you're most comfortable with. But my recommendation is at this stage, just dollar cost average at this point down. Just do it slowly so you can space out your buys. And then eventually I do believe that you see 100,000 on it, maybe 500, even 1 million down the road.
Soloway believes there is a very slight chance of making the bottom. He pictures Bitcoin's future as the blockchain equivalent of Amazon. But there's a constant chance of a 95% drop that brings Bitcoin back to 3,500. If Bitcoin gets written down, it's hard to tell if it's worthwhile to dump that position to buy lower. He doesn't recommend exiting the market because a bull run might immediately start and the risk of investors missing out on profit is too high. Soloway advises investors to choose the path they're comfortable with, but recommends to be sure to dollar cost average gradually and to space out time between each buy. What do you guys think about Gareth Soloway's prediction on Bitcoin's next move? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.